Today, I'm going to teach you exactly how I built a ghost company, anonymous LLCs, holding companies. You can even do shelf companies, shell companies, overseas trusts. There's so many different things that you can look at when doing this to protect your assets and to keep your anonymity, which is really important in the days of the endless, frivolous lawsuits. So let's go ahead and break down exactly how to do this. I even made a diagram of my company and how I run all these things, how I set up the LLCs, the corporations, etc. So I'm going to use myself as a case study. We're going to break down my diagram and exactly how my company is structured. I'm going to leave a couple small details out, of course, for my own anonymity, but let's get into Operation Ghost Company. So before I show you the diagram, I want to break down some of the tools we use. Now, you know, for a long time, I've used Wyoming registered agents, Wyoming LLCs. You can see them here on the screen. The reason I use Wyoming LLCs, I want to really break this down, is because Wyoming was the first state to adopt the LLC. They've got some of the best LLC laws to protect you, especially things like lawsuits, frivolous. If you're in the United States and you own a company, it's really not if you'll be sued, it's most likely when, because lawsuit is a game for a lot of these big attorneys. There's attorneys that's their entire business, is going after companies for random stuff. So keep that in mind. And then the other thing is, when you're setting up an LLC, you want a level of anonymity. Wyoming does a pretty good job of that. For a long time, people have also used New Mexico, which is another popular one. And then for incorporating, Delaware is a popular corporation, and we'll talk about that here in a minute. A lot of the big companies incorporate in Delaware. Outside of that, you could use trusts. Cook Island is a popular one. I'm not going to show you the exact trust that I use for anonymity reasons, obviously, but you could use the trust, and we're going to break this down. So let me show you this diagram. I'll go ahead and pop this up on the screen here real quick, and we're going to break this down step by step. It's a little more complicated than it looks. Clearly, I spent 3 to maybe even 4 minutes making this incredible diagram to blow your mind in Apple. Clearly my graphical skills are off the charts. But I broke down this diagram for you, and I'm going to break it down step by step so you know exactly how to do this, and you can duplicate this if you so choose. Now, the reality of the situation is we're going to go in reverse. So you can see two things. You can see a few things here, but let's go in reverse. So it's going to start with A and B. Now, if you see at the bottom, you're going to see A and B. What does that stand for? Well, I have 2 main companies. Now, the thing with these main companies is these are the companies that actually, so like these are some of my products. This is Go All In, the premium coffee that we sell on goallinshop.com. One of my companies, Go All In, has a couple of websites. Go All In Maker, we're actually making some custom made products now. So when you have a company like this, we also sell a ton of clothing and other items. When you have a company that sells products, you're going to have an LLC typically, or a company that is forward facing. Also, Privacy X is another company that I own. I have a couple of other companies, and we'll break this down, but we have, different products and services that we provide, so you have a company. But the thing is, usually you'll use these companies as a pass-through. So whether you sell on a platform, or whether you use something like Shopify, Amazon FBA, whether you use, regardless, you're going to have a company, an entity that passes the money through. Now, you can see my main 2 companies, which are tons of different products and different platforms. You don't necessarily need a company for everything you do. So if you have Shopify, that's one company. Amazon, that's another. Maybe you have another website, a secondary product. That's it. No, you could have one company that houses multiple assets, but the money passes through. Now, I do want to preference that I'm not an accountant or a lawyer. I'm not giving you advice of what you should do. I'm literally, you can see my name up there. This is what I do. This is what I've created, and I'm going to break down why. You do whatever you want to do. You talk to your accountant and lawyer. That's why I'm sharing you my breakdown, my structure. So you can see that it passes through to what's called an OC. That's an operating company. Now, an operating company is an anonymous company that nobody knows the name of. So a lot of people know the different names of some of my different companies. We've done things with Iron Macro, Go All In, our clothing manufacturing company, Forward Revive. We've done stuff with, of course, all these different, I'm not going to sit here and name all the different brands, but we've done stuff with all these companies for years. That the money passes through to the operating company. The reason this is important is that right there creates a level of anonymity. So if somebody comes after, for example, go all in, even though they do, well into the 7 figures, there's zero money. There's no money. So if you come after go all in doesn't have anything. So you have to figure out, well, who owns go all in? What is the operating company for go all in? Well, you're not going to be able to find that out very easy. You're going to have to get an injunction and a lawsuit to figure that out. Then you're going to have to go to the operating company. So does the operating company hold assets? No. Now, a quick sidebar, what most rich people will tell you is control is everything. Money is nothing. It's not about having money. It's not about having assets. It's not about owning houses and Ferraris and Lamborghinis and hotel buildings. It's about control. The person who controls those things is a successful person. The person who just has a bunch of crap, there's no success in that, and there's no value in that, and it's a ticking time bomb. Most successful people have very little in their actual name. If somebody were to come after Cody Hawk, okay, I don't, whatever. Like, you need to understand the structure of how people do this. And you've seen a lot of rich people get sued, and the people who sue them got almost nothing, because it's not about, it's about control. Now, you can pierce the corporate veil with a major injunction or a major lawsuit, like something like Dan Blazarian's dad, that guy who got embezzlement charges and all those crazy charges, something like the guys from Enron, something like the guy from who's that scam artist, Madoff. Those are like extreme cases where they can really dig deep. But for the average thing, you're going to be able to set up a pretty strong structure. And then also we're going to talk about offshore in a minute, if that's important to you. Now, the next thing is the operating company trickles up to the holding company. So the reason I'm starting at the bottom is things trickle up, and this is really important. The operating company trickles up to the holding company. The holding company holds assets. Now, the reason the holding company is so important is a holding company doesn't do business. The holding company, nobody knows the name. Let's say, for example, it's Cody Hawk Holdings. It's obviously not. That would be a horrible name, but it's whatever I named it. And it's basically an invisible company that nobody knows the name of except for me and a couple people at the IRS. And frankly, it holds assets. That's its whole job, is to hold assets. Now, if you have a forward-facing company, what a lot of people do is they have you and an LLC, and the LLC gives you separation from your company. That's true, but if your company gets sued, they can come after everything. And that's why it's such a poor, they can't come after. So let's say you have a house and a car and a savings account, and your company gets sued. If you have an LLC structured properly, most likely, depending upon the lawsuit, they can't come after your house, your car, all that stuff, because the LLC will protect you. But they can wipe out the LLC if the lawsuit is big enough and it's a real lawsuit, if something actually happened. And on the other side, if you personally do something, a lot of times they can't come after the company if it's structured as a real company and you're not just using it as your own piggy bank. Where a lot of people get in trouble is they structure a company and they double dip, and then the lawsuit will be like, well, we could pierce the corporate veil because, quite frankly, they're not treating this as a company, they're treating it as their own piggy bank. So you got to be careful and make sure you structure it properly. It's all just paperwork and structuring. It's basically in people's minds, but if you structure it properly, you have an unbelievable amount of protection. If you don't structure it properly, you have nothing. You've wasted a bunch of money on paperwork. All this is, I've spent tens of thousands of dollars on paperwork, and we'll break that down. So the holding company is really important, and I own shares in the holding company. Now, the reason having shares in a holding company is important and not just owning the whole holding company is if something does happen, you can break down the shares of the actual company. And this is really important. So you see me at Cody Hawk, I own shares of my holding company. My holding company runs the operating company, but it doesn't have any operational members. It doesn't have a board. The operational company runs other assets, small assets, and I do store small assets in the operation company. And then I've got company A and company B, which is by forward-facing brands and companies that does, millions of dollars in business. Then on the other side, you've got the trust, the trustee, and the assets. So you've got to look at what your goal is. Me having 4 kids, big picture goal is doing these things for them. So offshore trusts are really good because you cannot pierce them, but you've got to have the right trustee for the trust so you can separate yourself with your assets. You can still control assets in the right trust, but you can set it up with a trustee if you've got, so in my case, kids, etc., and then you can park assets. Now, what I'll do is with these assets, typically each asset will be in its own LLC. Now I didn't break that down for you because I'm not going to share all the assets I own and all the different things I broke down. But where it says assets there, I have about, give or take, 6 or 8 different companies, LLCs, structures, corporate entities that hold different properties, real estates, companies I own, investments in, things I've invested in. And I've been able to structure those assets in a way where each one's individual. Now, why is this important? If you owned 3 apartment buildings, let's say, and somebody sued one, but all 3 of them are in the same corporate structure, technically they could come after all 3. So if I own 3 apartment buildings, which I do not, I don't own any apartment buildings, but if I did, I would have 3 separate entities for those. I have a handful of different assets in there that are other properties, land, different things that I own, and they have their own structures. So when I put assets there, that's a string of different companies. I'm not going to go that deep into it because that's just going to bore you to death, but I wanted to kind of break that down. Now, the reason you don't see a red line going from holding company to trust or to trustee or to assets is because I keep those completely separate. So when the shares trickle up, it trickles up in the form of money. So then at that point, it goes through this entire web, and let's say we're going to take $1 million. Let's say goes, 500,000 goes in company A, 500,000 goes in company B, passes through the operating company. The operating company has some expenses. A certain amount goes to the holding company. The holding company has no expenses because they do no money. It transfers into shares. I own shares, so I can take a profit, but a lot of money can stay in the holding company. And then through the format, I can pay Cody Hawk whatever salary I pay, which is always very small for tax purposes. Again, control is everything. So if a company buys something, like even my iPhone, I'll buy an iPhone 12 Pro. I don't own this, my company owns it. Now, that's a stupid way to look at things because I own the company, so this is obviously my phone. This MacBook Pro. This is a company, one of these companies owns this computer. Cody Hawk actually has maybe this sweatshirt, So the way you structure these things is A, for write-offs, like I can write all these, I might write off almost everything I own, you can write off virtually everything for businesses, is the reason you structure different businesses. But more than that, and again, talk to your accountant, talk to your lawyer. I've spent a lot of money on accountants and lawyers structuring this to make sure I do everything above board. Been audited by the IRS countless times, every time. In fact, 3 out of the 4 times they owed me even more money. So keep that in mind. Hashtag winning. But no, regardless, obviously pay your tax, do your thing. This isn't tax avoidance. This is a way to structure yourself to where I pay all my taxes. I pay way too much in taxes, but this is a way to structure yourself where you can have a successful company and go through this process. So the reason I got a separation between Cody Hawk and the holding company and the trust is because you can separate your assets from yourself. Now, any assets that Cody Hawk owns, those are exposed to me personally, and any assets that the company owns are exposed to the company personally. But if the holding company doesn't have any assets, you can also structure the operating company and the holding company, or the operating company and the main companies as vendors, so you can keep them separate as well. So that breaks the red line as well. You can structure them as vendors. So there's a lot more advanced stuff you could do here, and maybe in another video, if there's interest, I could break down really in depth. But what I wanted to show more than anything is just the corporate structure and the corporate breakdown of how you can create anonymous companies. Because what a lot of people do is they just get one LLC and they've got themselves in the LLC. And that, don't get me wrong, that's not bad. And that's what I did for the first, 4 or 5 years I was in business. It was me and I had one LLC, and it kind of kept us separate. But then I started realizing as you start getting more successful, if something happens, you really set yourself up for failure here. And so I started looking at operating companies, holding companies, trusts. I started looking at being able to keep some money. It's why most major companies keep a huge chunk of their money in different countries, different areas. They diversify, because these governments can't be trusted at all, and everyone knows it, and so you've got to kind of diversify. Anyway, I want to break that down. I know this is a long, kind of drawn out way, but I want to show you guys exactly how you could create a ghost company. This is structured. Have you set it up? Do you just use one LLC, or have you kind of broke it up to where you have your assets protected? I know it's extreme. I mean, over the asset column, that's 6 or 8 different LLCs, but keep in mind, once you create an LLC for a couple of $100 and you've got some small operating fees, it's pretty much just sits there forever, right? You don't have to do anything. Nothing really comes in or out. You're not even really filing taxes. And a lot of people are saying, well, do you file taxes on all this? No, because when it trickles up, you basically have one corporate. Because if a company has no money, if they're an operating company and it trickles through, you will file them on your taxes, but it's filed as a pass-through. So it's not like I have 20 different tax returns. You have you always have a personal return, and you have a main return, and then if you have an investment. So I have multiple different companies and multiple returns, but it's not as in-depth as you think. And that's why, again, I recommend hiring a good accountant. We've done well with that, and they've helped us out a lot structure this. So anyway, if you haven't already, make sure you give it a thumbs up, subscribe. I could break this down more in depth, piece by piece later, but I wanted to show you exactly how to do this because I think it's important in the climate we live in. Have an amazing day, guys. Make sure you're taking action in your business all day. Go all in. This coffee smells incredible. Go all in, and I'll see you guys in the next video.